Welcome back, and Owen's here. Hello again. Owen, we're going to start off with a look at the markets, the Asian markets, and they're trying to find some gains after a pretty bad start to the week.
Yeah, the Nikkei's just about hanging on to a few gains there, Claire. It couldn't get much worse, but then it probably usually does, doesn't it? The Nikkei trading up around 0.7% in Tuesday's trading. The other markets, the Hang Seng, the Shanghai Composite, a little bit more choppy. Just a bit of potential takeover news for you, where the Hong Kong Exchanges and Clearing Limited, their chief executive, saying he's confident about a takeover bid for the London Metal Exchange. That's the UK's main commodities operator. So we'll get you more news on that as we get it. But those are the numbers for you there as things stand on the Asian markets.
So the market's recovering a little bit of poise after Monday's drubbing, but investors remain fearful of what this new era means for the French balance sheet. Many think François Hollande will drive his country into the red with debt-financed spending. But the reaction from the business community here has so far been less negative than you might expect. Nicholas Rushworth reports.
During his campaign, he issued a warning to the markets. They had better watch out. They are his real enemy.
My real adversary has no name, face, or party. He will never run for office, and so will not be elected. And yet he governs. This adversary is the world of finance.
With the battle announced, it was expected there would be a thumbs down for him on the markets after his victory. The CAC 40 slumped initially, but then recovered, ending higher on Monday. It is still early days. Greek woes are paramount.
It's difficult to isolate the Hollande effect at the moment. As far as the bond markets are concerned, I'd say concerns are much more international and are focused much more on Greece and on international growth.
France's new president plans a switch from austerity to growth. Squaring the circle includes hiking taxes on bank profits, a tax on all financial transactions, and a 75% rate of tax on millionaires, often the people creating jobs. French business leaders are mulling the change of president, adopting a wait-and-see approach.
We will see what this government wants to do, its time frame for changes, and how it goes about making them. And of course, depending on what the government decides, we will see how companies like ourselves need to react.
There's already been international reaction. Japan is warning Hollande to respect fiscal discipline amid worries he'll overspend to boost the economy.
Now, Owen, setting aside the rhetoric, you think that François Hollande as the finance bogeyman is a little bit overblown?
Well, possibly, Claire. And remember, it's the relationship with Germany that counts in all of this. What these two countries do between them pretty much drives the agenda for Europe. Remember, Hollande, one of his first order of business will be going to meet Angela Merkel. They've already spoken, I think, a couple of times on the phone in the last couple of days or so. One thing that caught my eye, though, coming from Germany, was a line from the German finance minister, Wolfgang Schäuble, about wages. You can see there in an interview, he said he's okay if wages do rise in Germany. It would suggest that the Germans are perhaps that little bit less austere about these things than we're led to believe. Germany's the most one of the most competitive countries in the world, and yet things are changing. There's big political pressure there to have a wage rise, and that's consistent with the kind of thing that François Hollande wants. Remember, he wants to raise the minimum wage. So these two countries perhaps aren't as ideologically far apart as we think there are. Yes, okay, the Germans are much more concerned with austerity and this fiscal compact, getting budgets down to controllable amounts. But there is a little bit of latitude there for François Hollande to go to Berlin and say to Angela Merkel, look, we need a little bit of growth here. He might not get this growth pact that he wants, but he's likely to get something. So there's much more room for negotiation than perhaps we've been led to believe so far.
And countries like the UK and the US are turning the screw a bit on banks.
Yeah, when it comes to finance, the French have, or Hollande, I should say, has what looks to be a fairly radical agenda. If you think things like 75% rate of tax on France's wealthiest people earning over €1 million a year. But countries like the UK and the US have been out of the blocks for some time now on bank reform. In fact, tomorrow on Wednesday, the Queen in the UK will set out the government's legislative agenda for the next year or so. And in that, you'll see a provision for splitting up retail and investment banks in the UK. That's been on the cards for some time now. And the idea is to make banks a little bit less risky so they stop making bets with our deposits, if you like, to stop another repeat of the financial crash of 2008. The US as well has some fairly tough legislation. Okay, it's been watered down a little bit, but certain banks like Goldman Sachs are having to readjust a little bit. So France isn't on its own with this agenda of trying to make finance a bit more responsible.
Now, the other big worry for the markets right now is where Greece is headed. Sunday's elections have left the country with no clear leadership, and talks to form a new government have ended in stalemate. The deadlock and position of some parties towards the bailout programme could prove critical to short-term financing, as Winnie Andrews reports.
Failed talks to form a government in Greece spark worries it will exit from the Eurozone. The political uncertainty could derail previously agreed upon reforms needed for the country to receive over 30 billion euros in emergency loans next month.
We need to face these problems and face them especially against our Troika partners, because otherwise the next tranche, which is due to be paid in Greece, if there is no government, then I fear that we're going to face serious problems in paying both salaries and pensions next month.
Some analysts say the political upheaval in Greece will lead to its exit of the Eurozone.
After the election in Greece, it's absolutely clear that Greece should leave the Eurozone to manage its economic problems. Having two problems, economic and political, is not able to manage. They have to go out.
If Greece left the Eurozone, it could devalue its currency, a move that would boost exports and tourism. But some say its departure would spark wider turbulence.
The problem is that if the markets see this precedent, people will wonder if the same thing will happen to Portugal, to Spain, to Italy. It could scare the markets.
While Greece's direction remains unclear, Sunday's parliamentary election showed that many Greeks have had enough of the austerity needed to stay in the Eurozone.
Okay, let's stay in the Eurozone now as we pick up on a little bit more company news for you. Shares in Spain's Bankia have dropped 3%. That's after the government announced a bailout plan. Ministers haven't confirmed how much they're spending on cleaning up the firm's balance sheet, but the figure is thought to be between 7 and 10 billion euros. Bankia was created out of a merger of 7 savings banks and has been the most exposed to the toxic assets left behind from Spain's property crash.
Staying with Spain, oil giant Repsol has threatened rivals with legal action if they try to invest in YPF, the partner seized by Argentina's government. Repsol has written to companies considering ventures with YPF, which was all but nationalised by President Cristina Fernandez. The move caused outrage among international partners, but Fernandez said Repsol had failed to invest enough in Argentina's vast oil and gas reserves.
And Facebook founder Mark Zuckerberg has hit the road to promote his company ahead of its stock market debut. Zuckerberg and his team were in New York on Monday to meet preferential investors as the company looks to raise around $10 billion in new stock. Facebook is expected to float on the Nasdaq later this month with a market capitalization of nearly $100 billion, one of the biggest ever.
And before we go, Disney has managed to avenge the flop that was John Carter. Proof that when you need them, Iron Man, the Hulk and Thor can get the job done. Yeah, what a super team that. I think there's a few more Marvel characters in that movie as well, Claire. Absolutely. Don't mention John Carter, the film that cost Disney around $200 million. It's all about the Avengers. It officially has the biggest opening weekend ever. There's the top 5. You can see the Avengers straight into that top spot after an opening weekend in cinemas across the US and Canada, which brought Disney around $207 million in tickets. It's already had a pretty good run in Europe. I think it's been out for a couple of weeks, in fact, here in France. Worldwide takings already around $600 million. Isn't the biggest film of all time. You have to think of films like Avatar, which took, I think, around $1 billion or so and counting. But that's a pretty good opening weekend, particularly given that cinema over the past 12 months or so has had a pretty rocky ride. Takings are up. In fact,
the Hunger Games as well. We can see in our list there is at number 4. Again, another massive worldwide hit that came out just before the Avengers. So good news for Disney. It'll be interesting to see how those figures translate into its next earnings.
Have you seen Avengers?
I've not seen it yet, but I like the look of the trailer, I have to say. I did see Iron Man, and I did see Thor. So.
It's not my kind of thing, but I've heard it is pretty good, so I might go and see it. Thank you very much, Owen, and thank you for watching. Stay tuned. All the latest headlines with Stuart Norval in a couple of minutes.